Happy Monday. Hope you're all well and doing great. After the weekend, rested up, ready to go. I'm personally fighting off this cold and almost through it. I'm amped up to be here at my desk with you all. If you didn't see Friday session, that was a lovely one. I highly recommend going back after this one and watching it. Today with y'all, I want to talk specifically about what's happening now that December 1st, Fed officially winding down QT. It was just a mere $5 billion a month. You can see that with QT, the balance sheet has almost been flatlining lately after they have significantly reduced it. Now, program efficiently ending. We continue to see SOFR rates spiking upwards, and it is only a matter of time before I mean, guys, this is the same cycle. I really want to talk about what expectations are for Bitcoin right now as the Fed moves towards its next phase of the Fed cycle. Something we've been talking about literally now for about 2.5 years of what expectations would be. That would be, of course, first the interest rates start getting lowered, and then they stop QT, and then they begin raising the balance sheet. It's only a matter of time right now. We are seeing stresses across the system. And right now, as the Fed, it's kind of like before the Fed could start outright QE, right? They need to get rates as low as possible towards the zero bound in order for it to be effective. It's not much different before the Fed begins raising its balance sheet. They need to go ahead and they need to stop QT. It's what the cycle looks like, this new Fed cycle. It's the exact same playbook the Fed used back in 2019 with the same signs. Now, what's different this time? Well, actually, what's different and what's developing right now, and we're going to get into it in today's session. I'll at least share my thoughts being asked about, well, what do I think as far as the potential carry trade unwind 2.0 as the Bank of Japan is getting ready to potentially raise rates. December 10th is a blockbuster day. We got Powell in the FOMC, and right before that, overnight, we have the Bank of Japan. 80% chance right now that they're going to go ahead and raise rates. And the question is what is going to happen? Yeah. And so I want to take a look at that and share my thoughts and just say that it's worthy of watching. So the reason I bring that or weave that into the conversation right now is because we're not just looking at the markets through a lens of the Federal Reserve and their influence on the markets. Bank of Japan bringing a different element into this that the markets are going to have to reconcile and deal with. So nothing easy about it. Bank of Japan aside for a second, for a moment, the last time, this is really important because I see a lot of new people out there on X, a lot of macro influencers, and they're like, oh, the Fed stops QT today. Where's your rally? Right? Like the constant whateverness. Guys, the last time that the Fed stopped QT in September of 2019, they began in early October that balance sheet expansion, and you could see that Bitcoin. I think it's very important for to like have the correct expectations, and I want to be very clear about what those expectations should be. What happened last time was that you could see over here that Fed goes ahead and begins that balance sheet expansion, and Bitcoin responds initially very well. It has a 10% pump. Now, whether or not it was because of and reacting to the Fed actually beginning to expand their balance sheet, or simply because it already had dumped off of the June 2014 high, Bitcoin had already dumped down 50%, almost 50%. So was that nothing more than a bounce? I mean, I don't know. One thing I just want to point out is that the last time that we were here during the Fed cycle, where they began expanding their balance sheet, winding down QT and lowering interest rates, Bitcoin was already in a bear market. Now, it had bottomed as far as the bear market low, right? And had a massive bounce out of it but was still in a bear market, off more than 50% from its all-time high, right? So right now, and I suppose some people think that right now today the bear market has begun on Bitcoin. Bitcoin off roughly 35% right now, 30, well, roughly 33% off its all-time high. It's still making a series of higher highs, and it's still making lower highs technically. Now, I've been very clear about my own personal opinion about that. And I think that even though, yes, it is making higher lows, it has taken structurally, this is a lower low. I don't like that. And just to show you where we peaked out into that, this was from how we left it, how we left it. We've came in and touched that upper resistance. We didn't break out above it. A hard rejection in place, but we'll get into the discretionary TA together in just a moment. I want to continue here just talking about what's going on, just pointing out the difference of where we are in cycle as far as Bitcoin. Some people believe recession 2026, or I think likely they believe that, well, in every past Bitcoin cycle, we've had, what is it, approximately 1,050 days ish of a bull market, and then we went into a 12-month bear market with the drawdown ranging anywhere between 76 to 85%. And because that's happened in the past, I mean, I have to think that that definitely clouds people's judgment. Now, other things cloud my judgment. Are they clouding my judgment? We all have bias. There's no question about it. We want to be really aware of it. I'm looking obviously at the big, beautiful bill, which is front loaded for stimulus, first quarter of 2026 and into 2026. I'm looking at GDP right now, expectations 4.2%. Atlanta Fed estimate right now. We're looking at AI and the spending on the AI boom, making up roughly, I hear, 50% of GDP. Now, of course, there could be changes that occur. If we see at any point in time a rollback in capex spending, that would be alarming. There's no question about it. But into 2026, I do see reacceleration. I do see a greater disparity between the top, whatever you want to call it, whether you call it the top 10, top 15, top 20%, and then the bottom 30%. And I think that we're going to continue to see a greater divide. But that is not reflective of what's pushing the economy and the markets. Will there be a day of reckoning at one point? We're not there right now. I'm getting a little sidetracked. So I'm just trying to paint the picture of where we are. And I suppose what I was doing as far as talking about last time we were in a bear market, we had bottomed out of the bear market, no doubt. And not only had we bottomed out of the bear market, if it weren't for the global lockdowns, there's a good chance that we would have actually been running a little bit higher into the halving. Let me just pull over here. If we weren't, this is where QT stops over here. This is where Fed balance sheet begins expanding. Price makes a lower low twice. So as far as expectations now that QT stopped, and we're going to be watching, I'm watching specifically, not only for when the balance sheet begins expanding, but the pace that it expands. And the only thing that I have on a percentage basis is going ahead and being able to monitor it to compare to the last time that they went through organic balance sheet expansion. Of course, Powell on December 10th is going to have to communicate what expectations are in the near term. That's our next piece of information. And then aside from that, it's watching what they do, not what they say, but what they do. My expectations are that Bitcoin should most certainly be under a little bit of pressure, right? My expectations is that what should happen, and I want you to see the difference over here. Let me just lean in 1 second over here and show you what happened on NASDAQ at that same particular time over there. And notice that once the Fed stops QT over here in September, let me zoom in, that COVID, look at that global lockdown. Don't even call it global lockdown. As soon as the Fed stops balance sheet expansion, right over here, I'm sorry, as soon as they stop the balance sheet runoff, QT, still a little bit of pressure through the end of the month. It wasn't like an immediate reaction, and anyone looking for an immediate reaction should absolutely not be. But as they began in October, and I don't think it was till October 14th. I'm not positive about that, but as they begin balance sheet expansion very quickly, the Nasdaq, led by big tech, finds a footing and begins a melt up. Bitcoin lagged here by a couple of months, several weeks. And my expectations are that we would like to see, once that balance sheet expansion begins, not as QT ends. QT's ending, that's just getting ready for the expansion of the balance sheet. Okay? There should be no expectations, of course, the Fed is stopping QT, that we're going to see a massive rally ensue. My expectations are, as that balance sheet expansion begins, that yes, led by big tech, we should see a rally begin. If that's happening, that's a good sign. And then I expect that, that assets, depending on where they are on the risk curve, and Bitcoin is lower than big tech, that they should find their footing and begin their rally as well. So I just want to not subdue expectations. I just want to have realistic expectations about what should take place next and on what timeline. Again, if we see, as the balance sheet begins growing, that big tech is leading, that's a great sign. Shortly thereafter, Bitcoin should stabilize. And so long as they don't lock down the world again, this should carry out for a longer period of time than it did last time. Right? Last time this led into the end of February, and then here on CTM, we were keenly aware of what was taking place. We were very early. We were very aggressive in riding that downtrend. And again, I could look around, and the only other person that I know, and I had this wrong, was Eric Townsend on Macro Voices. Except it wasn't Eric. Eric said recently that it was Jim. This guy's, you guys probably are very familiar with him. His name's escaping me. I'm sorry about that. I really just want to give credit where credit is due. So hold on one second. This is Macro Voices, and this is the podcast that led me to say, hold on, just bear with me here. You know how I get caught up. I just need to know something. I have to know it, and I want to make sure that I get this on the record. Jim Bianco. So on this September 4th episodes of Macro Voices, Eric credits Jim Bianco and having him on his podcast around that time, which led him to understand what was taking place as far as that massive sell-offs. I don't know anyone else at all in the entire markets who was on the right side over there. I know that we were. And Jim Bianco over here, credited by Eric as far as that. Yeah, so that's a great question over here. Let me jump over very quickly, and then we'll come back to this story that I'm painting here this morning. Does the long and short end of the curve rise during reacceleration, or do you rise? I'm going to pick up this question tomorrow, Michael. Hold on one second, y'all. All right, finally we get to be here in our zone with each other. I'm going to pick up that question tomorrow. So be here tomorrow for sure. By the way, anyone has anything that it's important that we look at together and we cover, please go ahead either in the comments here, or those that are watching this out on the replay, do include them so that we can make sure to just cover everything from all different angles and all eyes. Now, listen, right now, currently, as far as our positioning, so let me just jump in and cover our positioning very quickly. MicroStrategy talking about selling Bitcoin. That's new, right? Indeed, we are seeing, and just we're just here to talk about what is, y'all, right? Like no emotion involved. I understand some people might own long-term MicroStrategy positions. I do. That's irrelevant as far as focusing in on what is happening. And we see that the Fang Li, the chief executive officer, this strategy CEO is not Michael. I'm surprised to know and understand that. Interesting. Fang Li, Strategy's chief executive officer, said on a podcast on Friday, "We can sell Bitcoin, and we would sell Bitcoin if we needed to fund our dividend payments below 1x MNAV." She goes on to say, "There's the mathematical side of me that says that it would be absolutely the right thing to do. And there's the emotional side of me, the market side of me, that says we don't really want to be the company selling Bitcoin," Lee added. "Generally speaking, for me, the mathematical side wins. Certainly seems like expectations are being set that MicroStrategy might actually sell Bitcoin needed to fund their dividend payments." Now, at the same time, Michael over the weekend was talking about adding more green dots, buying more Bitcoin. You have to wonder what I think it's fair to say that even if they do sell Bitcoin to be able to cover their dividend payments, at the same time they continue from the capital that those particular instruments bring in, continue buying more Bitcoin. And I would imagine that this is pure speculation, that they would likely be buying more Bitcoin than selling. Look, I'm just laying out what's happening. Nevertheless, MicroStrategy stock definitely gapping down and accelerating on that news, and currently holding an open position 41% into profit. You never know when a big trade is going to come. You simply never know. And one of the failures of people is to chase what's hot. I remember in 2022, Ethereum from CTM 2.0 mechanical trading was so hot. 2023, a lot of people, including myself, went very heavily into Ethereum allocation. Look, like the smartest thing you could understand is that nobody could predict the future. Nobody knows what's going to happen next year. And as far as our positioning, diversification through templates, through Bitcoin and crypto and stocks, and then an even allocation across them is the smartest way to approach this, because you have no idea what's going to outperform ahead. And usually, once the template is broken, that's actually what the time that you want to be leaning in, because sure enough, in every other time that shortly then after, we've been back to new all-time highs. I guess what I'm trying to say is don't FOMO into MicroStrategy right now. It remains, even on the buy side only, a tremendous template. But just because it's holding a massive position on the short side, don't look to like, oh, I should be like all into MicroStrat. No, you don't know what happens next. And it's no indication, because it's keying off right now, that it's going to do that in the future. What it's an indication of that you're methodical about what you do, you will be on the right side. And in the future, you'll be holding a massive position somewhere. We don't know on what instrument it's going to be. FNGU also entered the market now on the long side. So this is kind of getting into the question that was really important. So hold on one second. It was pending a close a little bit earlier. And now it's not. So again, stocks are traded on the daily time frame. At the close, we always get the confirmation if we have either a close coming for the opening next day or a new entry. Stop loss could hit at any time during the day. It's only once a day on the market open that there is a potential new execution from outside of a stop loss, as well as the affirmation that that pending is confirmed. In this particular case here, it looks like the position has an opportunity here over the next 3 hours to remain active into tomorrow. As far as receiving a conflicting signal, right? Over here you have Ethereum short, currently 15% into unrealized gains, and Cardano still holding an open position 32% into unrealized gains. Question is, what happens if you get a long signal? Right? Listen, very easy. You trade what is happening. There are many times, and not many times. This is very important. Listen up. There are times during market turns, like for example, I'm reminded of what happened in late 2022 as the bear market was bottoming, and then early 2023. And there were many times where you were getting conflicting signals or bouncing signals. Bitcoin was going long side, short side, long side, and you have to trade what is happening on your template. Now you have to look at it as diversification. In this case, you're looking at Bitcoin, Ethereum, Cardano, and Solana. And each one of those four templates is traded individually, and then they work as a whole. So we like to call it the beautiful dance. If markets are kind of uncertain, meaning that there's no massive upward momentum, and we like when there's massive upward momentum. We like when we're long Bitcoin, Ethereum, Cardano, and Solana, because that usually is an indication that we're riding a big wave. That's honeymoon all day long. However, since that we cannot predict markets and we don't know what happens next, we also very much like when Bitcoin is long and Ethereum is short, or vice versa, because it's a hedge. We call it the beautiful dance, right? So if at any point in time you are short, like, and this is, I'm just talking about Bitcoin and crypto right now. This could also be stocks. There are many times that we're long stocks and short crypto, right? That's, and again, it's tech stocks that we trade outside of MicroStrategy and the spot ETFs. But there are many times we have conflicting sides, whereas we could see stocks long and Bitcoin and crypto short. Could that ever happen where it's vice versa, where stocks would be out of the market and short, and Bitcoin and crypto are long? I imagine it's quite possible. We just ride and trade momentum. If we were to see something like an adoption event, that very well could take place. That's generally not the norm, right? Generally, tech is leading, and then we see Bitcoin and crypto doing their thing. You have to trade what is happening on the chart. I'm sorry, it's catching up in a couple of comments right now. Sorry, I'm glad to be catching up on these comments. It is absolutely a honeymoon feeling when we are just completely maxed long across Bitcoin, crypto, and tech. But you have to grind it out to get there. For trading on the daily on stocks, have we tested executing on the close instead of the next open? We originally had it on the close, and it was because of the OG Wes that we wound up moving it towards the open. The stocks and their gaps, which are frequent, they just tend to backtest favorably towards holding over it. But we have done that, Michael, and perhaps it's time to always double check and do things again. But we have. Yeah, I mean, no one can answer this question in so much as this. And I'll come back to our story over here. Listen, retrospect is great. So, by the way, so where we are right now, I'll get to that question in 1 second because it's a very important question. Um, what? Omicron, guys, if you hear, go ahead and take a moment, hit the like button. If you watch this on the replay crew, please smash that like button. Really, really, really. Bless you, Ace. Okay, so what my expectations are, and are there wild cards out there? Yeah, we'll get to the Bank of Japan in 1 second. And right now, this is not just like the dollar is the reserve currency. The Fed is the central planner of the dollar central bank, and their monetary policy basically runs the show. Yeah, in the past, and it still is paramount, but at this particular point in 2019, Bank of Japan and their policy was not a factor. It is a tremendous factor coming up and into play. So something to watch out for going forward. All things the same or similar, my expectations once the balance sheet begins rising, not once QT ends, once the balance sheet begins rising, that we should see big tech responding first, leading the way. Bitcoin, lower lows happened last time, 2 lower lows. Could it happen again? Sure. Does it need to? No. Should we see big tech leading? Yes. And if that's happening, soon thereafter, I expect that Bitcoin finds its footing and begins to rally out of it. So let's move into the Bank of Japan. Is there anything else I want to add about Bitcoin and what took place last cycle? Only so much as I think we covered it. If I brought up any questions, someone please let us know. And I'm just going before they locked down the globes, what was taking place. So you can see the lag. This is when balance sheet expansion starts. You could see initial reaction good, or was that a bounce from a 50% move? I don't know. What's kind of neat about this descending triangle here, and then this move down, is that that's just what happened the prior year. On a like fractals are great. Here's that descending triangle, and then here's the breakdown. It's almost the same as what happened right over here. And you can see the massive descending triangle and then the breakdown. And then even the recovery out. Massive recovery out. This is not a recovery out, but massive bounce. Interesting. I think it's super interesting. But I love dorking out on fractals and such. So Bank of Japan is considering hiking their interest rates in December. They meet on December 10th. Let's go ahead and take a look. Let's find it. By the way, what's going on here? Silver trading at $58. Gold not closing yet, but here's our line to stay on the right side, and gold is flirting with it. A close above, to me, is just close my eyes, because there's no way that I expect gold so soon to continue moving out to all-time highs. But that would be a close your eyes type moment, and you guys are familiar with them. I know you're familiar with it because we did that in January 2023 with the NASDAQ. Like, everyone was as bearish as possible. Not everyone. I heard that Michael Howley was expecting liquidity at that point to run in, and I believe somewhere between October and December turn bullish on equities. Again, I like to be aware of everyone's viewpoint, especially those that are not similar to mine, but opposing mine, and especially with Bitcoin. And again, Bitcoin, of course, was under some pressure last time this particular cycle, and we just looked at it was off 50%, and now it's off a little less, 33%. I digress. I don't know where I'm running with. So let me just come back over here. December 10th, we are looking at the biggest day ahead. We have the night before, we have the Bank of Japan. Wait, hold on one second. Is my dates off? Whoa, sorry. Oh, there it is. That's the Bank of Canada. Totally off. Guys, when is the Bank of Japan meeting? I apologize about my fumbling here. December 18th, 19th. All right, I fumbled that. My understanding was definitely off. So we have the Fed on the 10th, and then a week later, we have the Bank of Japan. Okay. Wow, right before the Christmas holidays. A lot of people are paying attention to what's going on right now. They're worried that we're about to see an unwind of the Japanese yen carry trade. And you can see that ever since Bank of Japan governors talking about that there is or putting up expectations of a rate hike, 25 basis points into that December meeting. There's been a lot of concern in the market. So first of all, everyone is familiar, and I wonder. So I think anyone who's really focused in on whether or not this rate hike out of the Bank of Japan could potentially cause an unwind of the Japanese yen carry trade. No one knows how much money is wound up in the carry trade. Their estimates are between 10 and 20 trillion dollars. It's an enormous amount of money. People borrowing Japanese yen cheap and then going ahead and investing in other currencies, which are paying a greater dividend, a greater swamp, I should say. Now, does that a 25 basis point cut, hike, change the dynamic of the carry trade? It doesn't. Fed is on a loosening cycle though. And if you were to see by the end of Trump's term, interest rates in the United States go down where Trump would like them, down towards 1%. And Bank of Japan is moving closer to that. At that point, there's no purpose of a carry trade. Now, could you see a carry trade between the Mexican peso and the Japanese yen? Yeah, but that's like tens of billions of dollars. That's so far and as of today, the best estimates that I can find. It's a far cry, and it's very different from the amount of money that is levered into the Japanese yen. A lot of people are very familiar with what happened in 2024, the summer of 2024, when you had the great unwind. And I wonder, that being so fresh in people's mind, is that what's causing people to be hyper aware of the potential dynamics as the Bank of Japan begins to hike? So my own intuition is it's not going to play out anything like that. That does not mean that it should not be watched, and it should be watched acutely. It's a very important dynamic in the markets today. Just because my intuition does not mean that that's not what's going to happen whatsoever. But my intuition is that there probably was a significant amount of money that was actually unwound and hedged out during that last particular period. The Bank of Japan had a flip flop pretty quickly on their position. They said when there was a recovery in markets that they would begin their hiking cycle once again. Obviously, it's taken a while. It's taken, over a year to get back to that place. It seems like there's a high probability they're going to go with it. The market's reaction is the market's reaction. I don't know. I know that's my view. I'm watching what's happening. I don't think that this is going to be the black swan that, as everyone's looking for it, that takes place. I think you would be a fool not to be watching it. And I suppose taking it even further, if this hike does cause any type of turmoil within the markets, it's going to have to cause a very quick policy intervention right now with the fragile state of the liquidity within the system right now. The Fed obviously is being forced to stop QT and then beginning to grow back towards ample reserves. If the Bank of Japan's policy decisions cause any type of disturbance in that fragile system, it's probably going to cause Washington to tell Japan what they need to do and to do an about face, and at the same time, it's going to cause a reaction from the Fed. And if there's any type of like we look at panic cuts, and always we look at the market's reaction in the 12 months after the panic cuts and the 3 months after the panic cuts, and that's usually when we have the greatest reaction to the upside. If anything out of the ordinary were to happen, it's not going to be long lasting. It's going to have to be met by policy response from central banks. That's my view on that. And I suppose that's probably different than a lot of other people's view who are looking for Armageddon because of it. So I'm just giving you another vantage point to consider. Oof. And then there's also, so we know that the Bank of Japan forced to abandon their tightening cycle so quickly, and was the move exaggerated? Moves in markets tend to be during unknown periods. They're forced to abandon it. They said that as soon as market conditions are stable again, they will return to it. Markets seem to not be stable at the moment, but a little wobbly here. Bitcoin being the barometer of that, and they're returning, or they're saying they're returning. I wonder. Now, listen, markets currently pricing in roughly 80% chance that they are going to go ahead with the hike in December. I wonder if this is a little bit of Powell verbal intervention. If you remember, it was just last month when Powell was like, listen, uh, during the FOMC, the December cut is on the table. We don't know that it's going to happen, and that verbal intervention was well and timely played. It was very well done. I said it in real time on our Thursday, the day after the meeting. I was like, what Powell just did was well played. I think he's keeping the market guessing. Market definitely had a greater reaction than I anticipated. Nevertheless, as soon as the Fed governors walked that back, markets have then recovered. I'm judging this off the NASDAQ, obviously. Is that what we're seeing that's taking place right now with the BOJ? Were they watching the Japanese yen here getting out of control as it was towards that 160? 160 is just like the fake line, and it's a line in the sand where, you know, they have to start getting worried. Was this some verbal intervention here, well played verbal intervention to keep traders and speculators a little bit more, let's say, without being able to take on too big of positions and put people by putting them in their place. I that could very well be what's taking place over here. It could be nothing. Let's see what they do in December, and I don't know what they're going to do. So it could be just a little bit of Powell verbal intervention over here. We'll have to watch what they actually do. Bradford, whatever. Um, where else are we taking this? I think we should cover our discretionary entry. Stopped out now over here. So we took underbelly over here at 88,150. It came into the first area of resistance, this pocket of resistance we were looking at. It made, I'm just reviewing this with you. It made lower highs, right? We never liked those lower highs over here. And those that were managing this better, right, could have been looking over, look at that, two touches over here. That would have been a better exit for those that are looking to continually be hyper focused on discretionary and looking to better their execution. Stop loss over here for our intensive purposes, out of the market. Now, some of you know that this is like, unfortunately, this move hasn't yet fully given way. It would be a breakdown over here. What else could I look at? Or what else did I want to bring to the table with you? Oh, we were looking at where I said that I missed this trade. You remember on Friday's stream when I was like, I was away, we weren't really looking at this. This would have been the better, more aggressive underbelly to take, and we looked at it like that. That's interesting that so far has held that area of what was support with the two touches to it now. But more appropriately, what we're seeing is wedge, breakdown, a retest into it, and that is resuming downwards right now. So that is very, very, very bearish right now, continuing here on the markets. Were the liquidations enough? How much in liquidations are we looking at today from buy side traders? Is that enough here to get the markets to bounce? Are we seeing the NASDAQ, which is also putting in a similar breakout retest right now? NASDAQ on the breakout, the retest, if that's able to resume up over here, is that enough to grab, able to Bitcoin to be able to take a bid into it? We will be back on the buy side on our 8-hour swing templates on Bitcoin sooner than later. All within range, all within realm, could definitely be happening. But again, just to set our expectations, Bitcoin should lag tech if the markets are able to find a footing. And then there we are. Close the trend line off the flag high. Oh, they took too many. So you cloned it off the phi, and then I want to see where you moved it to. You moved it to the bottom. I'm not exactly following what you're got going on, and so, Ace, could you post in the discretionary or Bitcoin channel, and I'll take a look at that. I would like to see it, because I want to see it. I'm going to remove this over here. So, and again, those for paying attention all the time, I moved this in and locked this in as we came in towards that resistance for the tighter stop loss, managing that position. This is off of the bottom wick, the CTM 1.0 down over here. I mean, you're still hanging by a thread. Ace. Yeah. And from what I understand from Phoenix Fire's manual backtesting on V4, continues to look improved. We're going to cut our session here today as we get back into this week. Guys, everyone and anyone, any comments you have about what we should be looking more keenly into, I'll take a look at with you all tomorrow. For now, have a beautiful day, everyone. God bless you. CTM strong. I'll see you all back on the inside. I mean, oh, I thought it was a she. Is Fong Li a guy? Yeah, I don't know. You all know about the reservations I've had the whole way through. I've been very clear when it was not an opportune time. It, obviously everyone's aware that why Michael Saylor told you not to sell his Bitcoin. He was abundantly sharing plenty of strategy shares, a lot of strategy shares. And, now it turns out that strategy is very real as far as looking to potentially sell that Bitcoin they said they would never sell. Either which way, all that matters is that we know how to trade it. And that's everything, right? When to be in the market, when out, and on what side. Gotta love here seeing tech taking a nibble. Let's just really quickly review anything else coming close to pending long over here. We still have with TQQQ, we still have ST2 keeping us out. We looked at that on Friday. Listen, we trade what's on the templates, and that's it. The video lagging over here. Tesla getting close. Tesla's on the horizon. Any bit of follow through would see Tesla likely the next entry that we're looking at. Everyone, God bless you. Li Fong is a he. Michael Saylor acts a lot like the CEO. That's all I have to say. But whatever. That's all good. What is Michael's executive role as far as strategy? I guess he gets away with saying, "Listen, I told you we're not going to sell any Bitcoin, but I was not the CEO." So whatever. I'll see you all back on the inside.